Hey everyone, welcome back to the channel. Today we're diving into a topic that's on every crypto investor's mind: how to sell your crypto for profit. Selling crypto can be emotional. It's easy to get caught up in the fear of missing out or losing everything. In this video, I'll break down the when, how, and what to do next when it comes to selling your crypto. Let's be real. Trying to time the market perfectly is like trying to catch a falling knife. It's risky, and you're more likely to get burned. The market is unpredictable, and even seasoned investors can find themselves on the wrong side of a trade. Instead of chasing the elusive perfect moment, focus on what you can control, your own strategy. A well-thought-out plan can make all the difference. Set realistic profit targets before you even think about buying. This means having a clear idea of what you want to achieve. Ask yourself, what kind of return would make me happy? 2 times, 5 times, 10 times? Knowing this helps you stay grounded. Once you have a number in mind, stick to it. Discipline is key in the volatile world of crypto. Don't get greedy. Remember, you only realize profits when you sell. Unrealized gains can disappear in an instant. Another critical factor to consider is your time horizon. This will influence your strategy significantly. Are you in it for the long haul, or are you looking for short-term gains? Each approach has its own set of rules and risks. Short-term investors might be more inclined to sell after a significant price increase, even if it's below their initial target. This can be a smart move to lock in gains. The key is to align your selling strategy with your overall investment goals. Consistency is crucial. Pay attention to news and trends, but don't let them dictate your every move. Use them as tools, not as your primary guide. Fear of missing out and panic selling are your worst enemies. Emotional decisions often lead to regret. Write down your entry and exit points and stick to them as much as possible. This will help you stay disciplined. This will help you avoid making impulsive decisions based on emotions. A clear plan can keep you focused. The crypto market is still relatively young and volatile. Expect the unexpected. What works in one market cycle might not work in the next. Flexibility is essential. Stay informed, adapt your strategy as needed, and never invest more than you can afford to lose. This is fundamental to risk management. Don't be afraid to take profits along the way. Small wins add up over time. It's better to lock in some gains than to watch your profits evaporate overnight. Secure your wins. Remember, you're in this to build wealth, not to chase fleeting gains. Set realistic profit targets. Determine your time horizon. Stick to your plan. Don't try to time the market perfectly. It's a game you can't win consistently. Stick to your plan and don't be afraid to take profits along the way. Consistency and discipline will lead you to success. Alright, you've got your exit strategy planned out, but now comes the execution. This is where things can get a bit tricky, but don't worry, we're here to guide you through it. How exactly do you turn those digital assets into cash? It's a question every crypto investor faces at some point. You have a couple of options, each with its own pros and cons. First up, laddering out. This method is often favored by those who want to manage risk more effectively. Instead of selling your entire crypto holdings all at once, you sell portions at different price points. This can be a strategic way to maximize your returns. This helps you mitigate risk and avoid the dreaded, what if it goes higher feeling. It's a way to ensure you're not putting all your eggs in one basket. Let's say you bought Bitcoin at $20,000 and it's now at $40,000. That's a significant gain, but the market is unpredictable. With laddering out, you might sell 25% at $40,000, locking in a nice profit. This way, you secure some gains while still having skin in the game. Then, you set another sell order for 25% at $50,000 and so on. This staggered approach can help you take advantage of market highs. This strategy is useful in volatile markets like crypto because it allows you to capitalize on upward price movements while still protecting your profits. It's a balanced approach. On the flip side, laddering out can be more time-consuming and might require more frequent trading fees. These fees can add up over time. You also risk missing out on potentially larger gains if the price skyrockets after you've sold a portion. It's a trade-off between security and potential profit. Now let's talk about selling all at once. This method is often considered by those who want to make a clean break. This is a straightforward approach where you cash out your entire crypto position in one go. It's simple and can be executed quickly. It's quick, simple, and can be tempting if you're feeling bullish or want to free up capital quickly. This method provides immediate liquidity. This method can be advantageous if you believe the market is about to correct and you want to secure your profits before the dip. Timing is crucial here. However, it's also the riskiest approach as you're betting on a single price point. If the market doesn't move as you expect, you could miss out. If the market continues to climb after you've sold, you might experience some serious fear of missing out. This can be a tough pill to swallow. Ultimately, the best strategy is the one you're most comfortable with and aligns with your overall investment goals. Whether you choose to ladder out or sell all at once, make sure it fits your financial plan. Alright, you've successfully sold your crypto and you're staring at a nice pile of profit. Congratulations. Now comes the fun part, deciding what to do with your hard-earned cash. You could reinvest those profits back into crypto, diversify into other asset classes, or even treat yourself to something nice. Option number 1, reinvesting in crypto. This is tempting, especially if you believe the bull market is far from over. However, approach this with caution. Just because you made money on one trade doesn't mean you'll automatically strike gold again. Before you go all in on the next hot coin, take some time to cool off, reassess the market, and identify potential opportunities. Option number 2, diversifying your portfolio. Diversification is key to mitigating risk and building long-term wealth. Consider allocating a portion of your crypto profits to other asset classes like stocks, bonds, real estate, or precious metals. This helps spread your risk and creates a more balanced portfolio. Diversification doesn't mean randomly picking stocks or buying into every asset class. It's about strategically allocating your capital based on your risk tolerance, investment goals, and time horizon. And finally, option number 3, treat yourself. You've worked hard, made smart investment decisions, and now it's time to enjoy the fruits of your labor. Whether it's a down payment on a new car, a well-deserved vacation, or that fancy watch you've been eyeing, don't be afraid to reward yourself. Just remember to be responsible and reinvest the rest wisely. Okay, let's talk about the elephant in the room, taxes. It's a topic that many of us would rather avoid, but it's crucial to understand, especially when it comes to cryptocurrency. The IRS treats crypto as property, not currency. This classification has significant implications for how your crypto transactions are taxed. This means you'll be subject to capital gains taxes, just like you would if you sold stocks or real estate. It's important to keep detailed records of your transactions to accurately report your gains and losses. When you sell your crypto for a profit, you'll owe capital gains tax on the difference between your selling price and your cost basis. This can add up quickly, so it's essential to be aware of your tax obligations. The amount of tax you'll owe depends on your holding period and your income tax bracket. Understanding these factors can help you plan your transactions more strategically. If you've held your crypto for less than a year before selling, you'll pay short-term capital gains tax, which is taxed at your ordinary income tax rate. This rate can be quite high depending on your overall income. If you've held your crypto for more than a year, you qualify for the more favorable long-term capital gains rates. These rates are generally lower, providing a tax advantage for long-term holders. The IRS considers every crypto transaction a taxable event. This includes not just selling but also trading one crypto for another, or even using crypto to make purchases. This means that even if you're just using Bitcoin to buy a pizza, you need to calculate the capital gain or loss on that transaction. It can be a bit of a headache, but it's necessary to stay compliant. Luckily, there are tools and software available that can help you track your crypto transactions and make tax time a little less painful. These tools can automate much of the process, saving you time and stress. Consider using a crypto tax software. These platforms are designed to integrate seamlessly with your exchanges and wallets. These platforms integrate with your exchanges and wallets, automatically tracking your transactions and calculating your capital gains and losses. This can make the entire process much more manageable. Another option is to consult with a tax professional who specializes in cryptocurrency. They can provide personalized advice and ensure that you're taking advantage of all available deductions and credits. They can help you navigate the complex world of crypto taxes and ensure you're compliant with the latest regulations. This can be especially helpful if you have a large number of transactions or if you're unsure about specific tax rules. The key takeaway here is this: don't bury your head in the sand when it comes to crypto taxes. Ignoring your tax obligations can lead to penalties and interest, which can be costly. Be proactive, educate yourself, and seek professional help if needed. Staying informed and prepared can save you a lot of trouble in the long run. So, there you have it. A comprehensive guide to selling your crypto like a pro. Remember, the key to success in crypto and in life is to have a plan and stick to it. Don't let emotions dictate your decisions. Whether you're laddering out, selling all at once, reinvesting, diversifying, or treating yourself, make sure your actions align with your overall financial goals and risk tolerance. With a little bit of planning and a lot of common sense, you can navigate the exciting world of crypto and build lasting wealth.